Guys, I think the bottom is near. And that's not just my gut feeling, but I've got data to back it. So let's look at why I think a move upwards is imminent. What's up, my name is Caroline and this is Wealth in Progress, where you'll learn how to make passive income with cryptocurrencies. In this video, I'll show you why I think the bottom is near. Now, to be clear, timing the exact bottom is virtually impossible. But what is easily doable is seeing the signs that tell you that we're near. Now, this allows you to DCA in and to prepare properly, and this is what we're trying to do here. Now, none of this is financial advice and I could always be wrong. So while I'll show you the data, it's still important that you always do your own research. Now, as a crypto investor, you're likely looking for one thing above all else: how to buy the bottom and sell the top, right? After being in crypto for almost 5 years, my partner Kieran and I have learned a whole lot about charts and on-chain metrics that allow us to do just that. As a result, our portfolios have massively outperformed the market over the last couple of years. Now we'd like to share our tips and tricks with you. This is why we're holding a free masterclass where we share all of our secrets that allow us to buy low and sell high over and over again. Sign up now by going down into the description and clicking on the first link to get your invitation. Again, it's completely free and we'll show you our most successful trades and how you can replicate them. All right, let's dive in. All right, now let's first of all take a look at the charts and see what's happening. So BTC is currently sitting at around $37,600, and I'm now on the daily chart, and you can see that since November 9th we've been trading downwards basically. Now what's very interesting is if we look down here at the RSI, the relative strength index, you see that this is basically drastically oversold, or it has been just a couple of days ago. Now this chart, this oscillator, is usually drawn to this pink or this purple area. So as with the Bollinger Bands, as it's always, the price is always drawn to the middle of the Bollinger Bands again, the same happens here. So what happens is once it goes out of that purple band, it will go back in. It's always like that. So if we look back down, back here, you can see it the same at the top. Once it goes out of that range, it will go back in. Now what happens, what that basically means is if it's under this purple area, it's oversold. Now what that basically means in simple terms is that there's no hype at all here. That means retail investors are basically freaking out and want to sell all of their BTC, and that's usually what whales are looking at, because they want to snag up the cheap BTC. On the other hand, if it's up here, that means that there's a lot of hype, all the retail investors want to buy in, and that's usually when whales start to sell. So the RSI is a good indicator to show you what the momentum is like, what retail investors are doing versus whales. Now, as you can see, this went down to 20. That's pretty much the lowest it ever goes. It went down to 20 on January 22nd. Now, if we take a look at back in history, if we take a look at what happened historically, you can see the last time it hit 20, so that's down here, was in March 2020. And you probably know what happened in March 2020. That was that Black Swan event where everything went to the absolute lowest point. I think BTC went to about 3,000, and that was right before a rally upwards started. Now, between then and now, it went to the oversold area, but never as deep as 20. So it's now going up again, and it will likely trade sideways somewhere down here. But going that deep is a really rare event. And historically, even if we go back further to, here it reached it again. So that was all during the bear market. That was the lowest point in November 2018. And all of these have been really low points after which a rally started. Now again, to be clear, I'm not expecting that this will explode tomorrow. What will likely happen is if we compare it to the last correction between May and July, is I could see that something similar to this scenario happens again. So this means it will trade sideways and maybe even go a bit lower. If we look here, I mean, we had that wick down here up until 29. And then it traded sideways, but it tested that again. So I could totally see something like that, and it could totally take a few weeks, maybe even a month or two. But what this shows us is that the bottom is likely very near. This happens very rarely and only when the price usually explodes pretty quickly after that. Now, the next indicator I want to take a look at is the Pure multiple. I've got a dedicated video about that I'll leave on top of my head, so if you want to check that out for yourself, it's a very useful indicator, useful metric for you to time the top and to time the bottom and time the top. Now, this metric looks at Bitcoin miners, how much they're receiving, how much they're selling, and it's usually a pretty good indicator to time the tops and the bottoms. So what basically happens is if this goes very high and close to that red area, that means that the top is likely near, and if it dips down in the green area, that's likely that we've reached a bottom. Now, if we take a look at that has usually been pretty precisely, so you can see in December 2017, that has been the last top. Since then, it didn't go into that red area, which is also an indicator that we haven't seen the top of that bull run yet. So that's an indicator saying that we're likely entered into a super cycle and the blow off top has not happened yet, and that's one of the reasons why I think it's going up again. Now, what's more interesting is what it is doing now. So if we zoom in here, so let's just take this range from 2018 to now, you can see that we're now at 0.69. So that's pretty low, but it's not entered into that green area. However, that doesn't necessarily need to happen for a trend reversal. So that was around July 1st, June 30th. So if we take a look back at the charts, you can see that this wasn't the exact bottom, but it was very close. So that was about 2 or 3 weeks before the exact bottom happened, and this is a great way for you to DCA. So you can start dollar cost averaging in, and that allows you to stop missing the bottom basically. So that's the ideal scenario, that it really dips down, because that is a very clear indicator. However, if we look at the last time that it was at the range where it is now, that is this time segment here. That is about between August 2020 to October 2020. So let's take a look at that. All right, so August 2020 until October. So you can see that was also a nice accumulation phase. When did it stop? So that went actually until the end of October. So that was already in the upwards movement, but let's take a look at what happened after that. Look at that. That was right before that rally started. So right before that rally, that went up until May. So we've had a few corrections, but it went up until May, before the first crash happened this year. That was in this area. So you can see it doesn't always have to dip into the green, but being this low is usually a sign that it's an accumulation phase, especially for whales and the smart retails like you, hopefully. So that shows, and that's also an indicator that it could that something similar could happen again. So it could totally be that it goes sideways like that for a couple of weeks or even months, and that is a good chance for you to accumulate. And it could and something similar like there, like where was it, up until October, that's a very real possibility that this is the accumulation phase before we blow off again. All right, now we're not done yet. I've got 2 more things for you that show you that the bottom is very likely very near. Now, the next thing I want to talk to you about is the fear and greed index. So that basically shows you how the people are feeling. Are they very greedy? That means that we're usually close to a top. Or are they very fearful? That usually means that we're very close to a bottom. So if we scroll down here, you can see this is this chart. So we're currently at a 24, but we went down to an 11. So that's about the lowest that it gets. During the last year, you can see it has gone down to about 10 a couple of times. And that only happened between, again, the May crash, between May and July. And the last time it happened was on July 21st. That was last time it went to 10. Let's take a look at what happened, July 21st. Now look at that, July 21st, that was literally the bottom. Now again, that doesn't mean that whenever it goes to 10 it's the bottom, because it has touched that a couple of times. And it's very well possible that the same thing will happen again. So it has touched down about 2 or 3 times now. And you can see here, that has been 3, 4, about 5 times. Very well possible that we need about 5 touchdowns to 10 before it goes up again. But what's also very likely is that this will look very similar. So this looks as about the first third or the first half of that period. So that means that we might need another month of accumulation before we blow off again. However, being down in this range, so between, I would say, 20 and 10, means that the majority of retail investors are very fearful. And what you need to do when others are fearful, you need to be greedy. And when others are greedy, you need to be fearful. So being greedy right now means buying, basically. And that's another indicator that we're very close to the bottom. Now the last part I want to show you is actually straight from our weekly analysis in the DeFi Academy. So what I want to take a look at out of our analysis are the BTC sent to derivative exchanges. That's another good whale indicator, so I'll quickly read through that and show you what that means. So this is just a part of the analysis, so we have had lots of analysis before that. So it says, we will continue with another exciting chart that depicts the average amount of BTC sent to derivative exchanges. When the average amount of BTC sent to derivative exchanges is low, the retail traders are playing around on the exchanges. This is also called the distribution phase, as whales distribute their cheaply bought BTC to retail investors. So again, you want to be trading like smart money, like the whales. And that's what all of this is about. All of these indicators show you how smart money, how the big fish, what they're doing, and that's what you need to replicate. Not be fearful like everyone else is, but look at what the smart money and the big people and the big guys are doing. So it continues, whales send transactions with a high BTC to take more extended derivative exchanges during the accumulation phase. In my opinion, it might be better to wait until the BTC mean is above 3.27 BTC per transaction. That is the average for the July accumulation. A higher mean, of course, would be fantastic, but it would probably only happen after a massive crash like the one that occurred in March 2020. So let's look at this chart. This is the price chart, and this is the BTC sent to derivative exchanges. Now, what that means is if BTC gets sent to derivative exchanges, it is for people, whales or retailers, to go long. Now what happens is if a lot of BTC are sent to exchanges, that means that whales are involved and that whales want to go long. Now whales usually do the opposite of what retailers are doing. So if not a lot of BTC are sent to derivative exchanges, it means that retailers want to go long. So you see that is marked here. The ants are the retail investors and the whales are, well, the whales. Now what you can see that during each distribution phase, that means when the price is very high, retailers want to go long because they think, oh, that's going to go to the moon. But that means that whales are staying on the sidelines. Then we have correction or accumulation phases where it goes down, and that's when whales are getting in. Now look at that. We've just had a distribution phase where it was very high and all the retailers wanted to go long because they thought that's going to go up forever. But look at what happened now. We're going down into that correction and likely into an accumulation phase like here. And look what happened. That has been like an explosion here of BTC going upwards. But what you can also see is that this has likely not finished. If you look at the past accumulation phases, that has always went on for about a month or two at least. So this has just been maybe a week or so and will likely go on for a couple more weeks before we move upward. But that going upward tells you that whales are buying now. So what do you need to do? You need to act like the whales and do the same and not freak out like the retailers that went long here. Whales want to go long here because they are convinced that it will go up again. So for them to go long, that's not just a guessing game. That's because they know that they want to accumulate now with the cheap prices and then sell off to the retailers again when it's high. That's basically the game. All right, so these are the data that back my assumption that I think the bottom is near. Again, I don't think it will jump up tomorrow, but I think it will be a couple more weeks of accumulation before it explodes again. Now, if you want to dive deeper and actually see all the secret tools and metrics that Karen and I are using to outperform the market to buy low and sell high, then don't forget to subscribe to the masterclass to learn all about secrets, our tactics and techniques. It's completely free, so don't forget to sign up now and use that chance. If you like this video, hit the like button down below, share with your friends, and be sure to subscribe. Thanks for watching, and I'll see you in the next video. Bye!